my dollars make it hurt.
Good day, everyone, and welcome to another episode on this Wednesday, Educational Wednesday, of the Let's Talk in Commercial Real Estate Investing, the Black Community Edition podcast, where we're here to talk about how to wisely invest our black dollars in commercial real estate so we can bridge that wealth gap between our counterparts in other communities and provide for our families generationally and more. So today, on this episode, I wanted to talk about, a little bit about underwriting, and what I see, what's going on. As for those who don't know me, I am a managing partner at Atentico Commercial Real Estate Broker Services here in Dallas, Texas. We're black owned. And we primarily provide full broker services to small and mid-sized businesses, individuals that are looking to invest, and so forth. So, as I stated before, don't know everything, but for the years that I've been doing this, and being that I'm actually, on the front lines of actually helping businesses, and I do this daily. I don't have any other alternatives. This is what I do as a profession. It's commercial real estate 24/7, 365 pretty much. Reading about it, increasing my knowledge, talking to colleagues. I'm also conducting transactions as well. So it allows me to get a better insight of where the opportunities are, especially when I'm out and about seeing things. With all the things that's going on with the pandemic, one of the biggest things that's being talked about in one sector is office. So obviously you had your traditional office, then it kind of translated into co-working. Co-working got hammered with the pandemic, as there was because of that, with the pandemic, having the distance and not wanting to spread the disease, you kind of have a desensification, where companies are at one point they were trying to compact as many people as possible in the spaces. Now they're kind of dedensifying that, so you're going to have more space per person. But all that being said, there was already a transition for a lot of businesses to kind of downsize their space, maybe take more of a hub and spoke model where they have a main headquarters and then they have like satellite offices here and there. With the movement to working from home, it already was a small percentage, depending on what the operations were for a lot of these companies. So maybe there's factor overall probably 5% of the workforce was working from home, and I think with the outcome that had happened and forced people to work from home and rely a little bit more on technology, they may increase anywhere to 10-12%. But if you listen to we listen to some of our clients and you just listen to what other people are reporting in the industry, you kind of have mixed reviews. So you don't necessarily sure how it's all going to pan out, how if that work from home percentage is going to increase a little bit more. But with all that being said, businesses are still leasing spaces. They're just taking a little bit more cautious approach of how to strategically take those spaces, right? Do we need all that space? Can we shift some operations to work from home? Is the office going to be more flexible as far as its usability, so that we're going to have a main hub or maybe have a couple of satellite offices? We don't need to necessarily have all the space, because you got to remember, for businesses, real estate is their second largest expense after, labor, right? So you're always trying to, as a business, look to manage your expenses. And so definitely just this pandemic allowed them to kind of take a closer look and see, are we really maximizing space? Because like I said, prior to that, the reason businesses were looking to, get more space is because they're moving to areas where the talent is, right? It's all about talent. If you have great talent, it allows your business to grow tenfold, right? And so to attract talent, you got to go where they're at. So, they were signing leases in locations where the talent was, so mainly in your urban locations, near your downtowns and those surrounding areas, or, the hot areas in the area. So, that's still going to happen, in my opinion. You're going to probably have a little bit more going on in the suburbs, suburban areas, as they'll lease some office space closer to where the people are in those areas. But I don't think office leasing in general is going anywhere. There's going to be a modification to it. I think there's going to be a fallout though, just with anything else that's been going on in commercial real estate. When we talk about retail and hotels and things like that, because of this, office is going to be a little bit of a lagger, maybe a couple years down the road, as again, businesses try to figure out how to change. Now, we're still helping clients sign leases. For those industries that are looking to expand, for those businesses that are looking to expand, for those that need to renew, because it just so happens that the timing has come about. And then you have a lot of your landlords who are wanting to keep their building occupied at a certain percentage, particularly over stabilization, which is around 85%. But when you're dealing with an office, from an investment standpoint, you got to realize that a lot of these offices, well, I can't speak for everywhere, but you'll see the historical trend of occupancy, and you really got to, when you're underwriting, look to see that can you run the office building at roughly around 75, 78% occupancy of the total space, because you rarely have a building that's going to be 100% leased or in the 80s. That I've seen over the different buildings that either we're helping lease or that come across my desk as investment opportunities. And I'm talking about even the largest institutional ones, right? That are managed by your JLLs, your CBREs, and the likes. That's, you got to kind of take that into consideration on how certain businesses are going to react as far as when it comes to leasing office space for those that are interested in investing in office space. You had also the trend of where these businesses were going to, the best and highest quality, right? So they're going to your Class A buildings, some of your Class B buildings, B plus buildings that have been remodeled, and then everything below that, was struggling to find tenants. And in response to that, even now, to keep the buildings full, your landlords are offering, more in TI dollars, more free rent, not necessarily trying to hold the line on their rental rates, to maintain, their cash flow targets. Because obviously, you gotta understand a lot of these buildings, they got debt on them, so you got to be able to maintain that and whatever the covenants they have with the lender in that regard. So that's probably one of the things you definitely want to take into consideration. And then also when you're looking at certain office buildings, not only based on the location, what's surrounding them. My first thing when I'm looking at is, does this building help the business recruit and retain talent? Is this where the talent wants to be? Is this a selling point? Is there things and amenities at this building that basically helps a business to win? Because you gotta understand, in real estate is about the people, right? So residential is about the individual, commercial is about the business, right? So what's in the best interest, or how does the business win by leasing space at your particular building? So what are the competitive advantages that are at this office building that you're looking to invest in? So with that being said, I pay attention to that. I also pay attention to the type of tenants that are there. If it's a big law office, what are they specialty in? Where they have other offices at? Is there any engineering firms? Tech? Tech, depending on what it is that they're actually doing in tech. They're expanding, so a lot of your software, enterprise software vendors, or not vendors, but tech companies are still gobbling up space. Your law firms, like I said earlier, they're leasing space, but depending on if they've been in an older space, they're going to lease something new. Otherwise, they've been kind of downsizing themselves, realizing that, hey, we don't need as much square footage as before. So I'm looking at that rent roll, figure out who they are, what their terms are. But it just really comes down to underwriting the business, those businesses there. What industries are they in? Are those industries contracting? Is that business, how long they've been in business? Because again, your tenants are going to dictate, how consistent and durable your cash flow is. And the building itself and where it's located is going to be on the durability to earn that income, right? So quality real estate never goes away if you can find it, if you can invest in it. So for those of you, it was kind of some tips that I wanted to give on our Educational Wednesday. We're talking about investing in commercial real estate, and I figured I'll talk about, office, being that, currently we were in the midst of trying to help a client with office space. So that way you kind of get a better understanding, at least an idea of what to expect, and some tips and tools for those of you that are out there who are interested in investing in office buildings. So until next time, happy investing. Subscribe, leave a like, leave a comment, because I wanted to make this a place where we can come together as a community, have a conversation about investing, particularly in commercial real estate, because being that from the business that I'm in, and you realize that, hey, when you sign these leases, or these companies sign these leases, the landlords, they're still making money. Some more than others, but it's an opportunity for us. I'm all for buying back the block and investing in our neighborhoods, but I also believe we can own in their neighborhoods, because they do the same thing to us, right? They set up shop, they take the dollars out of our communities and keep it in their community. So, why can't we own quality properties in the areas that they're in as well? And I think that in the long term, that provides us a network and a pathway for those of us who want to have our business in those areas, to kind of have an opportunity to get in there. So because we actually own in there as well, and we can make decisions, and we have the economic power and wherewithal to do it, while also making the profit, while also getting return on investment to take care of our family generationally, and to fund the things that are most important to us, whatever that may be: retirement, family, ventures, you name it. And I really do truly believe that commercial real estate overall is the building block to that, and then obviously businesses and other things on top of that. So until next time, thanks for tuning in, and let's continue to talk commercial real estate investing. Happy Wednesday.
These my dollars make it hurt.